Hi, welcome back to CapexForexTrading.com. In this video, we're going to discuss the 3 basic rules of Forex trading that you should bear in mind. Now, before we get into that, in terms of the content you will receive, everything will be in a video tutorial format. The reason for this is to enable you to follow things a lot clearly. Now, within those video tutorials, we will define and show you strategies that we use on a daily basis and that we have used for a long time. The reason is because we want you to be able to identify and trade exactly the same setups with exactly the same success rate. However, you will only achieve this if you follow the instructions and rules implied within those videos and Forex trading strategies. Now, if you're thinking at this point that you will definitely follow these instructions, and why wouldn't you? Believe me when I tell you that when it comes to the real trading environment, it can be quite hard to remember everything you've been taught, and you may forget a lot of the stuff that you have been taught. So if you do get to that stage, please refer back to the video in question and make sure that those rules are cemented in your trading style. So rule 1 is discipline. Discipline is by far the most important characteristic for any trader. Now, discipline comes in many formats. So first of all, just like we explained, you need to follow all the rules that you have been taught. Never make up your own rules unless you have solid data that supports your own rules. When you have a losing trade, make sure that you never double up on reinvestment in the next trade to recoup all those losses. Okay, you have to be disciplined enough to be patient to recoup those losses with sound and proper money management techniques. Also, never trade setups that are almost correlative with your rules. So unless the setup that you see on your chart is 100% correlative with the rules that you have been taught or that you have data on, do not trade that strategy. If you do this, you may as well trade a strategy that you've heard someone else trades without any evidence. Rule number 2 is understanding success rate. Now, when new traders come into the market, they think that if they follow the rules in every trade, that their hit rate will be 100%. That is not the case. There are other factors outside of your control, like natural disasters or something that a high-ranked political figure may say, that will simply reverse your trade into the opposite direction. Now, this is not your fault, but what you must do is make sure that you don't become a victim of this event. So make sure that all your stop losses are in place and understand that every trade comes with a risk. So don't change your strategies just because you think the strategy might be wrong. Okay, your strategy may not be wrong. The only reason, or the only reason why you should change your strategy is if you have solid data that the strategy is in fact incorrect. If the strategy is only incorrect when big news comes out, then you must not trade this strategy, but you must adapt to the market itself. And lastly, emotional control. Now, markets are very volatile, so don't let your emotions be the same, i.e. go up and go down. You have to be a solid thinker and control your emotions in every trade. The thing is that trading Forex is not a battle between yourself and the market. It is a battle against yourself. You must make sure that your emotions are kept at bay, because the market does not care about you. It doesn't care about how many wins you have or how many losses you have, and you should not care about itself. You should follow the rules that you've been taught and apply solid emotional control to every single trade. Now, there may be times in the market that you have to simply stay away, and trading can be boring in this instance. So don't trade just because you're bored, because the chances are you're going to experience a loss, okay? And you're going to kick yourself that you did this. The one thing you need to bear in mind that the next day or in the next hour, opportunities will always be available. So just be patient and make sure that you follow those rules. So in terms of rules, that's all you need to know for now. We will see you for the next video. Thanks. Hi, welcome to CapexForexTrading.com. In this video, we're going to discuss the very basics of what the Forex market actually is. So in simple terms, Forex stands for foreign exchange, and it is simply a place where traders from around the world go in order to buy or sell currencies from various countries. Now, whilst this idea of buying or selling currencies might sound strange at first, the actual execution itself is very simple. The reason for this is because all it involves is buying or selling of currency A against currency B. Now, we're going to make many more videos about this subject the further we progress throughout our Forex trading course to ensure that you understand this fully, so don't worry. Now, in terms of size, the Forex market is by far the biggest trading environment in the world, with over 5.3 trillion US dollars being traded per day. The reason for its size is because it involves big players like international banks, hedge funds, and central banks who have very, very high budgets for trading in the Forex market. Now, traders like you and I are very small players in this market, so we do not have the ability to move the market in any direction. Now, there are many currencies that are available to trade with in the Forex market, but there is also a list of 7 major currencies that you should bear in mind when you trade. They are the US dollar, the euro, the Great British pound, the Japanese yen, the Swiss franc, the Australian dollar, and the Canadian dollar. The reason why these are called major currencies is because they are the ones that provide the most volume in the market on a daily basis. Now, bearing this in mind, there is also a list of the top 5 most traded currency pairs. They are the Euro USD, the Pound USD, the USD CAD, the USD Swiss franc, and the Aussie dollar against USD. So there are also many other currency pairs that you are available or you can trade with, but these are the top 5 most traded currency pairs in terms of volume. So when you first begin to trade, these really should be the ones that you should place on your charts, because they're the ones that are going to provide most volatility and the most realistic market conditions. So in terms of the very basics, that is literally what the Forex market is all about. So we will see you for the next video. Thanks.